Hi, everybody, and welcome to the weekly market wrap for February 16, 2018. So we did have a pretty significant pullback last week. We actually got stopped out of a few companies. And this week, we're starting to see the market rebound. Now, the rebound, if you take a look here from, we'll go back to Monday, which is right at this level here on the S&P 500 ETF. We've had basically a flat Monday and Tuesday, and then when we came in on the 14th is when we really started to get some uptrend in the market. And we wound up going up a couple of days, and that was enough to kind of have our best week since about 2016 on the S&P 500. So that was pretty interesting. One of the worries that are starting to creep into this market is inflation. And when inflation starts to happen with the new Fed chair coming in, they're thinking maybe he's going to try and make a statement and raise interest rates 3 or 4 times this year. I think the consensus is that they're going to raise it by 3 times, but possibility of four. So that's the concern, that's the worry. But the reality is, if you take a look at the overall picture, what you'll see is that we had a nice run up for a very long time. Obviously, we spoke about this over and over again throughout the weeks. And then we had a big pullback, and now we're just kind of retracing some of that pullback. So we're not out of the woods yet. It doesn't mean that, everything is back to the way it was in 2017. In fact, I think every year is going to be a little bit different. Every time period will give us something different. If it was always the same, it would be the easiest thing in the world to make money in the stock market, right? We would just do the same things that work, and everybody would do them, and everybody would make money. But the way the market works is that as soon as everybody starts figuring out what's the easiest thing to do, that gets saturated, and it starts to squeeze the margins of that strategy, and then that strategy becomes obsolete or it doesn't work anymore. So then you have to come up with a new strategy and try and figure things out. So when we talk about our strategies versus day trading strategies or things like that, our strategies have stood the test of time. So even throughout these little gyrations, we're still able to, in the long run, make money. And that those are things that don't change. Human behavior doesn't change. In 1929 or 2018, it's always going to be that fear, greed scale of whether people are just buying because they think other people are dumb enough to buy it from them in the future at a higher price, or they're just selling because they can't stand the pain of losing money every single day. So those emotions will always be in the market. There's nothing we could do about it. And I don't, you could tell me computers and robots and all that stuff. The thing is this, those algorithms and quants, those are controlled by human beings. So what happens is you could put your algorithm into the market and it'll automatically buy and sell for you, or high frequency trading. But at the end of the day, you have to understand that there are people that are looking at the end of the day P&L, or profit and losses, for those algorithms. And if those people shut the machine off because they're scared that it's not working or that something is wrong, and they start recalculating their own algorithms, that is the fear demonstrated in the market in a little bit of a different way than that particular person buying and selling. But shutting a machine on or off, or a program or software or an algorithm, is this day and age, is the same as transmitting fear through the market. So that's kind of, I don't care what you do, you can't take the human emotion out of it, because even these robots, they're playing with real money, and that real money is traced back to a human who has emotions, who has family, who has houses and wants and needs and desires. And when those things get added or taken away, that's where the emotion comes from. So what we try and do is, as best we can, remove ourselves from that emotion by knowing that the system works and not succumbing to the fear and the greed that allows opportunities and could take away a lot of money if you're on the wrong side of it. So I just wanted to kind of show you what we're at, where we are at, excuse me, with the market and some of the concerns that are coming into play. I'm not seeing a tremendous amount of insiders buy shares, but the one that we put on this week actually looks pretty promising. So we'll just keep on plugging away. We'll keep on looking for the insiders that have had good success in the past and that are using their own personal money to buy shares of their company that they work at that they know probably better than any company in the world. So hope you guys have a good long weekend. It's a holiday weekend coming up, and I'll keep on doing the research next week and see if we could find something else for next Friday. And obviously, this week we also took off about a 15% winner, which wasn't too shabby, especially after last week's disaster with taking off, I think, about three or four losers. So um, good weeks come, bad weeks come, but overall, I think the strategy has been working terrifically over the past 52 weeks and beyond. Have a great weekend. Thanks so much.